Hello, hello, hello. Good morning. Happy Monday, everyone. Hope everyone is doing well. Some sad events over the weekend, so we'll see how those are going to play out in the coming days. But we got to still do our market analysis. Good morning, Patrick. Good morning, Sterling, with the news. Thank you. Good morning, Anissa. Let's see. Good morning, Jacob. Hey, Chris. So, I saw that there. Oh boy, everything's a joke. How do we get these people in charge? Uh, so if you haven't seen, also Logan speaking right now. She is from Dallas Fed. She has been very hawkish, but now starting to say that, from my interpretation, that might be more in the pause camp due to overall higher interest rates doing some of the heavy lifting. So we'll see what's going to be said by Barr and Jefferson today. That's about it for the news today. And besides anything coming out of Israel and the Gaza Strip, which can have short-term impacts on the market, especially gold and oil and the equities. But I think the equities are more poised to possibly shrug this off uh, unless it keeps expanding. Like if Lebanon gets involved and you get more of a broader Middle East conflict, then we could see some increased pressure on more and more sectors. So what do we have for the rest of the week? We have Bostic, Waller, Kashkari, Daily speaking tomorrow, inflation expectations tomorrow, but then we kick into PPI on Wednesday, CPI and jobless claims on Thursday, and the consumer sentiment on Friday. So that's where we sit. But overall, lots of Fed speak this week, CPI, PPI, but that's really what's driving stuff. You can see energy stocks and aerospace and defense, of course, all up this morning. Uh, so that's where we see big pop in crude overnight. Pretty red across the board. Going to be seeing some of this firms up. We'll go through the patterns also. So you see energy, industrials are pretty much flat, and then everything else is negative. Fed watch now has the first cut in June after the May meeting, and still everything priced in for a pause. Fear and greed still right on the border of fear and extreme fear, even with Friday's pop. Morning, Alan. Good morning, Options 22. Hey, Richard. In terms of earnings, remember I should have mentioned it before when I was sort of going through the week. Friday kicks off next earnings season. So we have PepsiCo tomorrow, Delta on Thursday morning, Walgreens Boots Thursday morning, but really it's the financials that kick off earnings seasons now. So we got J.P. Morgan Chase, from healthcare, United Health Group, Sten City, BlackRock, Wells Fargo, Progressive, and PNC on Friday. So that's going to also be important going into the end of the week, going into third quarter earnings season. So let's see where we sit. We had the gap down. We had the reversal. The only way this could have been traded was with an intraday momentum break on Friday, and there were we had some strong momentum bars. I hope everybody's learning to spot these when you get back-to-back bars like this, and then it hit the first and second target. And it closed, above the 62.5, and it already went to that 87.5 on these little minor ones. The retracements I'm watching now, I'm coming up to here for the next key retracements, and this 50%, this 44.15 areas right at the key breakdown zone. Right now, I'll be watching for firming pressure going into the open, unless we really start breaking below 4,300. 4,300 is very key. But we have the gap potentially left behind from the move down overnight. And if there's nothing else really strong today, although with the Fed, so to speak, already tilting a little dovish, we could see some of the gap fill in here. So that would be to What was the close? 43.45.25. So I'm going to be watching for that. If we break below that 4,300, which is also the 50% harmonic, 42.85.75, and then 42.71 areas are key, and then 42.56. So that's the way I'm using this harmonic on the run up from Friday. Above, if we do the gap fill in the Friday's close and we don't wipe out any remaining double targets, the next key double target is 43.86.25. And that's going to be a very key target area to about 43.71. So that's the area on any run up that's going to be very key into the rotation zone, the 37.5% harmonic, and the top of the rotation zone. So that's where we're sitting with that. Okay. Let's see. Good day, Christoph. Uranium had a strong bounce after the reconnection with the weekly rotation zone, maybe headed back to 87.5. Now it could be. We'll see if we have some time to get to uranium. NASDAQ, remember, it invalidated the double, then got the strong move up on Friday. Pretty much the same stuff. Let me. I'm using the harmonics from Wednesday's low to Friday's high. Same thing. We got the momentum bars on Friday. The key level for me is 14,970. 14,970. We start breaking below that. My key target is 14,875 roughly, and then 14,800. To the upside would be to the gap fill, 15,139.50. And then if we take out that, overall, if I flip this around to the next key harmonic area, the next key area, we got 15, about 216, 215, and then very key is 15,373. It's the 62.5 from the most recent swing, not the major swing, but the most recent swing, and the breakdown zone. So keeping an eye on that. What else do we have? Good morning, PMG. Dow, same thing as the S&P, ran up. First, second targets hit on the double. Again, the Dow will be to the potential gap fill. I'm watching above about 33.5, 33.480 to 33.5, and the gap fill would be to 33.625. The little key support ledge is coming in right about 33.350. And you could do your, I'm not going to go through it in depth, but you can do your same harmonics. And that's right below that is the 33.3, 62.5. If you got the 1 hour close below there, I'd start watching for more of a retracement towards Friday's lows and the breakdown in there. Other than that, besides the gap fill, the next key target would be 33.815. And then roughly 33,989 to 34K. Russell still in this major buying zone area we've talked about. The Russell, with this gap down, it didn't get quite enough to the target, but still, if this right here we have, if you were going to raise the stop, your closing basis would be 17.38.9. So that's why I'd be watching for the little key area right there to invalidate the other two targets. The gap fill is to 1759.7. Right also where the declining rotation zone is. On any bullish case, I'm not really focused on the Russell first. I'll watch the NASDAQ, then the S&P. To the downside, I'll watch the Russell and the Dow. Those are the first ones I'll turn to. And again, the 1739, 1740 is key here. The VIX, little pop, but already reversing. I'm watching still this 18 level going into today. The DAX, there's not much going on here. A little move up on Friday to the rotation zone and the bump back down. It really has to get some traction back above about 15,350. 15,350, and that would still be for a minor pop higher into the rotation zone. Again, we don't have any great long-term bottom here, but if the DAX breaks down below 15,180, I'll watch for a retest of last Wednesday's low area. The notes triggered the double. The double were triggered on the close on Friday. So 107.31.5, 108.09, 108.18 and a half to the upside. So that's where that sits. Actually, the notes did not trigger on Friday. It looks like it'll trigger today. Sorry, I made a mistake there. Got a little ahead of myself. It looks like it might also trigger on the 4-hour, which is completely valid, but that bar does not close for 45 minutes. So I'd be watching for that. If that triggers on the 4-hour, it's a completely valid pattern. And that would need the close above 107.12 and a half. And the targets are still the same. The stop level on a closing basis, since it's been confirmed, this is not going to change, 106.19. On a trade-through basis, 106.14. So that's the pattern in the notes. In the 10-year, you have the confirmed double top, but not yet triggered. Again, on a yield basis, you'd be looking for a close below 4.698. So it's been confirmed but not triggered. And the stop level on this would be 4.812 on a closing basis or 4.835 on a trade-through basis. But again, it has not officially been triggered. It's been confirmed because it's traded below that point, but it still needs to close below that point to continue, to trigger. Boy, it's a Monday, isn't it? Sort of a pause in the bear steepening, so we'll have to see how that plays out on the next couple days. Dollar after a 3-day pullback, keeping an eye on this going into. Now remember, we've had massive weeks run up. Last week had a pretty decent topping bar. If we do break below last week's low, about 104.95 to 105 is the first level of key support that I'll be watching. Upside, the thing that I need to see in order to start tipping more back to a bullish continuation is a close above 106.43. Crude, not looking to chase this at this point. We might get some backfilling here unless we get further involvement in the Middle East. But then I will watch. If we get further involvement in the Middle East, I will watch for a more sustained push in crude. But since this is now a news-driven market, I'm going to be watching for at least a partial backfill of the gap. All right, and that's if we start breaking below about 84.80. Then I'll be watching for at least a partial gap fill. So that's what I'll keep an eye on. By the way, let's see. If it pushes up and then can't sustain, if it can't sustain a move above 80, if it pushes up to above 86.65 and can't sustain that, then we do have a little valid double. So I'll be also paying attention to that. In order for me to really get bullish, we need to start taking out the highs from last night and then at least continue to push above 88.27 and eventually a follow through above 89.96. Natty gas, watching for any backfill now to 323, 324 area. That's the first level of key support. Gold with the pop, I would not be chasing this one higher. Gold has a tendency to pop on these geopolitical events and then backfill. So I'd be watching for the backfill to 1845, which would be for the gap fill. And if it backfills, it could make a longer-term pattern, a longer-term, more bullish pattern. So then I'll be watching for that. And then that could be really rolled into something potential. From my perspective, again, not trading advice. Yen, still nothing. Still keeping an eye on the bottom of this rotation zone on a closing basis. Remember, we're in yen intervention territory. Euro, If we do get a little pullback here, then I'll be watching for a more significant bottoming pattern. Other than that, it has to start getting a close above about 106.15. Then I'll start watching for a bigger push higher in the euro. The pound also watching to see how that pulls back, but I'd be looking at the euro first for anything. Bitcoin, not much going on there. Let's get to spiders and the Qs and the comments. Let's see. Sterling still with the news coming in here. Thank you. Top admin officials told the senators to prepare their constituents for a long war in Israel and the Gaza Strip. Okay. Wonderful. More war. That's sarcastic. But, Israel's got to do what it's got to do. That was a horrible, cowardly attack from my perspective. Targeting innocent civilians, just tragic. So we've got the gap fill. We've got the gap down in the spiders. Still going to be keeping an eye. We did close above the 62.5 on Friday, hit the 87.5, but right now, oops, let me take some of this off. Right now, the key thing I'm watching in the spiders, I'm flipping these around. About 425.65 and then 424.28. A close below 424.28, I'll really be focused on more of a breakdown pattern. Other than that, I'll be focused if we do get that strength coming in at the open, or at least retest and hold support, and then get some more positive breadth coming in. I'll watch that gap fill. I'll be keeping an eye on the futures first, and that gap fills to 429.54, and the double is still valid in play. If it does get the close, not even necessary today, but above 431.85. Okay, the Qs. The Qs, which remember, we can still roughly, because of this price action on Friday, that didn't completely invalidate it. I thought it would, so we can still use some of these double targets. Now you're going to have the gap down. So first area of key support is about 361.30. All right, then I will use the harmonics going from Tuesday's low to here, and 359.60, and then 358. 358, especially on a closing basis. To the upside, the gap fill, 364.70, 367.79, 369.85, 372.63. Again, this wasn't totally invalidated. It did not push low enough to do that, so we can still use those targets to the upside. Did you do a sector overview this weekend? It looks to me funny you mentioned that. I recorded last week. The podcast drops today that I'm on with the Futures Edge, and I went through with Bob and Jim a bunch of sectors. So it's happened last week, but it will drop today. So pay attention to the Futures Edge and some talk on the sectors. Okay, it's not using the sector strategy; it's just using some standard stuff. But I think it's a pretty good conversation. So thanks for bringing that up, because I forgot to mention that. What else do we have? You had uranium. Uranium after finishing the double targets. The key thing I'm watching for, Sterling brought this up right now, for a continuation pattern, I really want to close above 26.93 to really confirm this bounce. Okay? Uranium also, after hitting this was a %B buy on Thursday. The break above the high, the follow through to close. But then I now need a follow through above 26.93 with cycles turning back up. So that's what I'm keeping an eye there. Tesla, still watching this key 245 area. I don't know if it's going to be really able to break down. There were some the numbers out of China weren't good, but that is still, or with earnings coming in on the 18th. I don't know if there's anything to the bearish side just yet. So, but 245 is the first key level. Other than that, it filled the gap to the upside. To the upside, still 266.69, then 277.56 are the levels. NVIDIA, no more potential little double with the move on Friday. So the next key level, 467.84 to the upside. Beyond that would be to the close with any gap fill in there, which would be to 457.62. The breakdown zone's 433. So that's where we sit pretty much across the board, peeking in back at the S&P going into the open. Again, 4,300 to 4,305 is a major support zone unless I start getting momentum or really weak internals below there. Going to watch for that to hold support. And the breakout area, we're testing it now going into the open. So let's see, Barr now speaking. The proposed capital hikes would primarily impact banks trading and have limited impact on banks' lending costs. All right, fantastic. Thank you, everyone, for tuning in. Again, now we're in a news-driven event cycle because of the war, especially if it does happen to expand over the coming days in the Middle East. If there's more expansion, then that's really going to become a dominant player potentially for the markets. But right now, we got the overnight gap, so we're going to see how the market. I'm now favoring still some of these gap fills, at least in the short term. I think everything. I mean, Israel's pretty much said it looks like they're going to level Gaza, so they've announced their intention. So we'll just see how that plays out. But again, if Lebanon starts getting involved and you get more broader stuff from Hezbollah coming in too, then it could get very interesting. Also see the response to Iran with their backing of this. So I'd pay attention to any news headlines, but also pay attention to price action and don't overreact just based off a headline. That's how I handle these news-driven events. We have not been in this significant one since the COVID and then the Russian invasion of Ukraine. So now we're in another key news-driven cycle. With that, I will talk to everyone later. Have a wonderful, wonderful trading day. Bye for now.